Welcome back to the channel. Mike, the mortgage guy here. Today, we're gonna talk about something a little bit different. What to do after closing on your home. Let's get into it. Okay, so a lot of times we talk about what you're gonna do to get approved for a mortgage or leading up to the mortgage and what kind of finances we do. Today, we're gonna talk about what to do after you close on your home loan. Okay, you may want to get that house party planned. You may want to start buying furniture or getting some landscaping taken care of. But first things first, let's talk about your first payment that you're going to make. 2 weeks before closing, you're going to receive the information where you're going to be sending that payment. A lot of times people get a little bit nervous because it doesn't come as soon as you close that loan, but don't worry, you will get that first payment coupon showing where to send your payment. Now, Mike, you might be thinking, don't I send it to you, my loan originator? Doesn't that where the payment goes? Not necessarily. We are the loan originator, but a lot of the times we're not the loan servicer. Sometimes you will be making the payment to us or whoever closed your loan, but there's also what we call a loan servicer. So what happens is we, as the LO at our loan company, will close the loan for you. But a lot of times we will sell that loan off to a loan servicer and you will be making your payments directly to them. However, don't worry, your loan terms will not change. If you have a fixed rate mortgage, it's gonna stay that way. Just because we sell that loan off doesn't change anything whatsoever. You'll still be making those exact same payment terms to that loan servicer. Now, having said that, can your payment change? Simple answer is yes, and here's why. Your loan interest rate, if you're in a fixed rate interest, that interest rate will not change. What can change is your taxes and insurance. So each year they look at your taxes and insurance and they may higher those, they may lower those. That usually doesn't happen, but sometimes your taxes and your homeowner's insurance can get changed. So if you do get an updated payment showing your payment's gonna be higher, you can give me a call and we can decide and discuss what changed. Was it your taxes? Was it your insurance? Your principal and interest payment, if it's a fixed rate loan, that will never change. Another thing that goes into your mortgage potentially is if you're in a place that has an HOA. Your HOA payment is not going to be included in that mortgage payment. What I suggest, first thing is before you get into that property, you call your homeowners association and you introduce yourself to them. Let them know that you're moving in. Homeowners associations, they're not for profit. They are there to make your home buying and home living experience a positive one. So give them a call, see what they expect out of you, introduce yourself, and that goes a long way. Remember, when making these payments, it's just like a rental payment. These payments are going to be due on the first of the month, okay? They're usually late after the 15th, and you could get an additional charge for that. After 30 days late, it's going to be an extreme late, and that's gonna impact your credit. So make sure you don't get those 30-day lates, because that's gonna have an impact, a big impact on your credit. What I would do is get an auto pay set up, just like you do a lot of your credit cards and a lot of your other pays. Makes it easy. Get that auto pay set up and get it right there on your first. You can contact the loan servicer. You can send them a check, old school if you like. You can pay online. But the easiest way to do it is just get that auto pay set up on the first. That's way there's going to be no mistakes, no forgetting, and you don't get that negative impact on your credit. The only other thing that may change on these loan payments is going to be your PMI, your private mortgage insurance, if you have that. Now, we have made other videos on this that you can reference, but for a quick reference, FHA loans are going to have private mortgage insurance for the life of the loan until you refinance. Conventional loans have private mortgage insurance up until you get 20% equity on the home. Then it automatically falls off. So that's the only other thing that may change on that loan payment. The next thing is going to be property info. Always, always, always change your locks when you move into your home. That's the first thing you should do. Usually when you purchase a new property, all they do is get that key that was handed in by the last person and they hand it directly to you. We don't know who has access to that. Landscapers, a pool guy, gate locks, garage door openers, get them all changed. Something super simple to do and keeps you very safe. I'm a huge proponent of a Ring doorbell system. Again, keeps you super safe. Additionally, if you have security systems on your home, that could actually reduce your homeowner's insurance. So look into that as well. Another big thing that you can be looking forward to, or not looking forward to, I should say, is you're going to be getting a lot of spam mail. Don't worry, this spam mail isn't necessarily directly targeting you. They just see that you've recently purchased a new home, so you're going to be getting a lot of this spam mail. A big thing that you're going to be receiving is letters that look like they're from our company or the loan servicer company. They may even have our name in the headline. What you always want to do is one of two things, or both. Get that phone number, call them, see what the company is. A lot of the times they'll reference our mortgage company, but it's not from us, saying the terms are changing or the payment's changing. It's really not true. We probably won't be sending you anything in the mail. We'll contact you directly. We'll email you. The loan service will contact you directly. Give me a call, give the phone number a call, send us a picture, and we'll tell you directly if that is spam or if it's not. Usually it is spam, and you will probably be receiving this for about a year or so after you close on your property. Again, they will die off eventually, but be prepared to be getting a lot of spam mail when you originally move into a new home. The next thing, address change. This may seem obvious, but there's a lot of components to this. So go on to USPS and do a permanent address change. Just because you did this doesn't mean everything is going to be directly resent to your new address. You want to go to the MVD or DMV, depending if you're in Arizona or California, go on there or go in, if it's not too much of a drive for you, get your driver's license changed, get your address changed there. I also like to directly contact my bank, get everything changed on there. Go into all of my credit card accounts, change everything personally on there. Another big one, Amazon. Make sure your Amazon is changed. Anything like that. Few more obvious ones you want to do is your cell phone, your TV accounts, DirecTV, anything like that, and go into your gym. Make sure everything's changed in there. Just all the basics. You want to try to make a checklist of all this, and I do have an Excel sheet of a checklist that I like to send out upon closing of everything that you want to get your address changed on. Another big thing moving forward with the loan process, what you want to remember is refinancing the loan. This is something that we will talk about as your loan originator before we close the loan. Hopefully, whatever rate that we get you into, rates will come down in the future. You do not have to worry about keeping track of the market, keeping track of rates. That's something that I do as your loan originator. Again, even if we sell this mortgage off to another loan servicer, I will be keeping track of the rate that we close you in and when it's a good time to refinance. Usually, for a good point of reference, what we like to look at is that your rate gets lowered by at least 1%. That's when it makes sense to refinance. We will go through a breakdown of all the costs associated with refinancing and see if it's a good time for you. Lastly, what I really like to tell my clients is don't go house broke. Always have emergency funds. You never know what may happen. If you were renting before, you may not be used to having to get your dishwasher fixed, having to put a new roof on the property. These are all things that are come out of your pocket. Now, you will have a good idea of what kind of shape the house is in when you get an inspection before you get approved for a loan. You may be aware, hey, in 5 years, we're going to have to get the roof replaced. Hey, the pool is going to need a new filter. But there is stuff that the inspector may not catch or stuff that just may happen. So be sure to always have those emergency funds on deck. These are just a few of the things that are going to happen post-close that you should be prepared for. There's a lot larger list than this, but these are some of the main things that you may have to get prepared for. As always, if there's any questions about any of this, or if you want a more detailed list, please contact me. Thanks.